to really discern at what stage we're at?
Absolutely. So if we look at earlier this month, about 1,400 stocks traded on US exchanges below their 52 weeks all-time high levels. And if we look even more closely within the Nasdaq Composite, we had about 1,300 stocks or so that were about 50% or more of their peaks. So this year has been all about, re-rotation from growth to cyclicals and to value. It's almost like the market is jumping on the value train and then hopping on the growth train, and probably this will continue. If anything, at the end of 2020 we were talking about a bubble bursting in tech, and a bubble did burst below the surface, but we didn't notice because the market continued to rally. Why? Because the market has been driven by large caps, big tech, and cyclicals. But below the surface, small caps, mid caps, high growth, loss-making stocks were tumbling. And so this could actually be a good place to look for winners for 2022. Although we think that for the next, what we call the Santa rally, I suppose, whether it comes or not, big caps and 2021 winners will continue to drive returns. So, yeah.
Well, I mean, it's kind of interesting because if you look at perhaps some of the big tech stocks and you say, okay, these valuations are so high, it's difficult. You kind of have to hold your nose and buy them. How do you work through those two impulses of saying, okay, perhaps this market is exuberant, but then again, if you're not involved in it, you miss out on the bulk of returns?
Of course, the market was indeed exuberant at the end of last year as we were getting out of 2020. But I think, as I just said, a lot of companies, a lot of stocks have been repriced throughout the year. And, you point out at some stocks like, in the large cap space, Tesla or other smaller caps, like, I don't know, the more sort of Spotify type or those type of companies. Throughout the year, although their stock price has been tumbling down, their earnings per share and their fundamentals were going up and were improving. So they're still extremely expensive if we benchmark them to, historic, market valuations. But I think now it's a much more, safe. It's much more safe to allocate to those, companies and stocks than it was just a year before.
All right, Tancredi, we really appreciate your insight and really appreciate you joining us on Christmas Eve. Happy holidays to you and your family. That's Tancredi Cordero, CEO of the boutique investment advisory, Kuros Associates. Now, coming up,